Well, yes, it is very complicated because even if you see the VNB number that the company has reported, it's around 436 crore. Now, the lowest estimate on the street was around 510 crore rupees. So, it's a 15% missed even to the lowest estimate. VNB margins have come in at around 22.9%, while the street estimates were anywhere between 27 to 29%. Now, what could have led to this? Because there is so far no clarification coming from the company, and the company will be holding a conference call today at 8:30, and the street would be wanting to know on this. But what we understand so far is this could have been because of the increased cost ratios and because of the shift that we are seeing in product mix. And what analysts are also saying that structurally the margins have been declining for ICICI Prudential Life, and this will be the key monitorable over the conference call today. Now, do remember the valuations of ICICI Pru are on the expensive side. If you see the 12-month forward PE is at around 59 times, while the 5-year average PE of ICICI Pru stands at around 53 times. And today's explanation of management coming in for this VNB decline is the most important thing to track, because that's how analysts will extrapolate the FY25 numbers. So if this is just a one-off thing, then FY25 estimates won't get impacted. But if this is a structural decline, then FY25 estimates will be downgraded, which could lead to more downgrades coming in for ICICI Pru also during the day. So we need to keep an track on that.
See, the 8:30 conference call perhaps will answer that. That is it a structural decline? Is it one-off? It is one-off. The stock's going to bounce back. If it is structural, then we do have a problem there. The entire life insurance sector is going through very big changes. There's LIC, which has got their mojo, which is coming back. There is fintech, which is changing their distribution. There are the old guard, which essentially are looking at things which are moving higher. The whole appeal that insurance was also placed on tax saving and life saving, that appeal actually has gone through. So I'm actually a bit surprised here, Soumeet. I'll tell you why. Because they get a large business from ULIP. ULIP business has done well because equity market returns have been great. Despite that, if you've not delivered when you're supposed to deliver, when equity market returns and the last quarter numbers were strong, then you got to ask yourself, is that at the best of the time if you're not delivering, so then is there something structural which is happening in the sector or in the company?